Hey guys, it's the Unicorn of Wall Street and welcome to my channel. Here we talk about trading, crypto, strategies, and almost anything that crosses my mind. Okay, let's get started.
Okay, so today I'm going to talk about Bitcoin. I'm going to give you my most profitable strategy in Bitcoin. It's not only extremely profitable, it's also how I like to trade. Very stress-free. It's not based upon technical analysis. It's not based upon fundamentals. It's very simple, and it's based upon what I believe is the most powerful trading tool, which is statistics. It's a strategy that works way more than 50% of the times, and it's kind of like playing heads or tails, but you know that you're going to win at least 70, 80, 90, and depending on how you actually want to trade this setup, you can push your win percentage up to potentially 90, 95%. And that's why I like it. It's very set and forget. It's very mechanic. It has really no discretion part. It's like, oh, maybe I could have bought there, sold here. It's very simple, very straightforward. So let's dive into it. I want to point out right away that I don't know if there's other traders, other people that trade the same strategy. I'm not claiming to be a genius that I found it and nobody else found it. And if there are other people out there who are doing this technique, they're making money from the market. That's great. And so yeah, I don't know how other people stumbled into this. I like to define it kind of I don't know really the fundamentals behind it. I gave myself an explanation. I don't know if it's the true explanation, but here it is. So basically, it all starts off with gap trading. If you're not familiar with gap trading, there's a ton of videos online. You can go. People explain how gaps work. But basically, when the market is closed for usually fundamental reasons, mostly over the weekend, for example, in FX, when the market closes on Friday, it closes at a certain price. And then on Sunday night, depending on the time zone where you are, it opens. And when it opens, sometimes it creates a gap, which is a difference in price. Either it's higher or lower. Now, again, playing the statistic game, I think it's up to 93% or 96% of the time, the gap is closed, because usually that gap means that traders potentially are losing money because effectively they closed, their positions were left open on Friday, and by the time the market reopens, they might be in a loss without having a chance to manage their position because the market was closed. So usually the market goes back, at least touches the close of Friday, and then goes back to moving in whatever direction it's supposed to move. And this happens in FX, gold, whatever. The interesting thing is that crypto, on the other hand, is open all week, 7 days a week. And so I was thinking, well, but people that are trading on, not on exchanges like, I don't know, Binance, Coinbase, or whatever, people that are trading Bitcoin on MT4 brokers, let me go and check if those brokers keep their feed open. Some do, some don't. And that was an interesting statistic. So then I thought, well, what do institutional money do? What do institutions do? Well, their traders go away on Friday and come back on Monday morning. And that's usually where the biggest volumes are, when banks, when funds come into play, when whales, the institutional, now it's called smart money, comes into play. And so I was thinking, well, theoretically, if on a retail broker, you will have almost always a gap on Bitcoin from Friday to Sunday. So I started backtesting and I started looking back in the past, and I found something extremely interesting. And I don't know who moves the market. Is it the market makers for retail, MT4, those type of brokers, market makers? Are they moving the price? I don't know. Is it other traders? Is it institutional money that find other flows and ways to correct the price? Again, I don't know. And quite frankly, it's not a priority to know. The key element is that the takeaway from all this is that if you know, and it's quite easy to know, what the price is at the close of a Friday, by the time the market reopens on a Sunday evening, you can almost certainly know that Bitcoin, the price for Bitcoin, will come back to Friday's price. So let's go and take a look in the charts how this looks like. And I'm not going to cherry pick specific weekends. I'm not going to jump from one date to another. I'll just randomly, starting from today, I decided to do this on Sunday evening. So we had this just recent weekend to analyze and just go back in time. And you'll see how this works. So basically, this is Bitcoin. And my time frame, my time zone, is on UTC. So you get the price at the close of Friday, 11 p.m. UTC, right? So in this case, it's the 26th, and it's this candle right here. So the close is right around here, and we can do this in a more precise way. The close is 41,853. So we can mark it off here, 41, right here, 41,853. Okay, and we lock it. Okay, so this is Friday's close. You can see this line. Right, so then we had Saturday, the 27th, and today, which is Sunday, the 28th. And we basically are at the reopen of the markets. And you see, we had a push down, okay? Clearly, if we go and look at the volumes, you can see that the volumes that you'll have during the week where institutions are in play, news comes out, correlation with gold and whatever, all that happens here. But the weekend, you can see volumes are much flatter, right? Actually, interesting things happen. See, for example, you have spikes here, but that's not key to this strategy. As I said, it's very mechanic. And here you can see a push down, went back to the closing price of Friday, went back up, and right around Sunday here, you basically kissed off exactly the price of Friday. So once again, if you bought down here, put your take profit, you would hit take profit, sell from up here, go down. I'll get into how you put these levels, and that's where everyone can choose their own taste. As I said, the key element to know from this strategy is that you have a specific price at a specific time, and you know in a certain window of time, which is 2 days, the price is going to come back. So it allows you to ideally trade in a range that you absolutely know, or at least know for a very high percentage, will work with a regression to that price. So let's go back to last weekend. It's the 19th on the 20th, right here. And once again, let's take off the volume, which is irrelevant at the moment. So here, the 20th, candle of 11 p.m. right here. The close is 41,685. So that's 685 right here. Okay. And again, here during the weekend, no real movement, but still, every time the market pushed in one direction, went back up, down, up, down, up, down, up, down. And here you go. You basically close on a Sunday right around the same price of Friday's close. Let's do one more weekend. And I mean, you're more than welcome to just go back in time, scroll back in time, and you'll see that this works exactly as it's supposed to. And it keeps on working. It works over and over and over and over. Once again, let's do the last one here. Friday the 12th, right here. The close of Friday is this one, right here. Okay. So here we go. Let's get this done correctly. The close is 42,906. 42,906 right here. Okay. And once again, you see, down, we go back up, we go back down, we go back up. You can see it just wiggles around. And interestingly enough, here, look, the candle, which is right before 11, is this long wicking one. And look, Sunday opens exactly touching the price that wicked on a Friday. And look, market goes back up. And for all the week, basically hovered around the close of a Friday. So you can see how powerful these levels are. And you're more than welcome to just scroll back in time, take a look. On a Friday, it's very easy to do this back testing and this analysis. And you pinpoint the closing price of a Friday, and you can see the market will wiggle around, will go up, will go down, which isn't relevant because you treat the market as a range. The key that we were talking about is predicting the fact that it's going to come back to the level of that closure on a Friday. So here's how then you can trade this strategy. One possibility is to look at the ATR, the range of the week, get an idea, was it a very high volume week, and then break down that number and find a smaller version of that number and basically place a certain amount of grid orders, right? So you would basically have a grid of buys and sells at an equal amount of dollars in this case, or pips, and then simply the great thing about this strategy, that's why I called it set and forget, because on a Friday you come in, sit down, get that closing price, put your orders, and then go away, forget about the market, go and enjoy your weekend, and on a Sunday evening, come back home and you'll see, take profit. Another way of trading it is by looking at previous support and resistance. So in this case, you could look at the previous swing high, and you could put a sell order, and it did move against you a little bit, but then came back, hit take profit. For the buy order, in this case, you didn't really have a significant support that was formed during the week. So that would have been more mathematical calculation. Another way of looking at this could be by putting, for example, a VWAP and having it anchored at the close of a Friday, and simply buying and selling on the deviations. You can use different channels. It really is irrelevant the type of instrument that you want to use. Personally, I like to use just straight off orders, so I would take orders based upon mathematic calculations. So in this case, the close is 41,853, and for example, I would add let's say 500 on both directions, add for the sells up top and subtract for the buys down below. So you would have 41,353, which would be right around here. So in this case, it wouldn't get filled. And for the sell, you would have 41,353, which is right around here. Yeah, which is just above the previous swing high. See, many times you'll find that the areas are pretty much similar. In this case, there you go. The market turns, hits your take profit. And this is quite set and forget. Also, something cool about this strategy for people who prop trade, usually I know that many prop firms now took away the time limits, but some still have that 30-day, which effectively is 20 days for trading the 5 days a week. In this case, if they have Bitcoin and they allow you to trade over the weekend, this is a strategy. It can bring you in constant profits, and it gives you 8 more trading days, 4 more weekends, which, you know, if you're looking for that 1, 2, 3, 4% to hit your profit target, well, this is an amazing strategy. Another idea is, and be careful not to over leverage yourself, but if you're trading derivatives, futures on, Binance, Bybit, this is a great strategy. You won't get slipped like the high volume spikes during the week. During the weekend, the positions get filled pretty consistently and quite well without a lot of slippage. And then you hit your profit. And the cool thing is that it can, many of you are part-time traders, maybe have a full-time job. This is something that you can just take a look, get at your computer on a Friday evening, look at the close, put your orders, forget about it, and on a Sunday, collect profit. So that's why I call it the best and most profitable Bitcoin strategy. Personally, I like Bitcoin. I like trading Bitcoin, and this is one of the best strategies that I came up with. So, hope you enjoy.
Okay, guys, thanks for watching. Please do consider subscribing to the channel, as it reminds Google that I do exist. Till next time, stay safe and follow the rainbow.